helpful for all the people to make their career into the accounting side. Okay. So a couple of things I had. Before that, let me introduce myself. My name is Sami Owais. Usually people call me Sami Owais. Okay. I work for Apex Fund Services, and it's been like I have overall 12 plus of years of experience, mostly into the fund accounting. Day-to-day basis, we do accounting stuff, and I do take sessions on the same thing. And by qualification, and I'm an MBA Finance, and I have done also CS Inter, Company Secretary, Executive. I have completed. That is my qualification. And about experience, 12 plus years into mostly in accounting. That's my passion. That's where I try to keep myself. Okay. So moving on, as everybody knows that these are the things we are going to cover today. Cash versus accrual system of accounting, accounting equation, accounting cycle, and how to create journal entries. I'll see how much I can cover, how maximum I can cover today. I will do my best. Need your cooperation in terms of putting the right questions and keeping yourself on mute. To start with cash versus accrual. So there are two, what I call it is as a basis of accounting. Basis of accounting means there are two widely used methods in terms of accounting we have. One is the cash method or cash basis. Another one is accrual basis, or also called as mercantile basis. When I say cash basis is nothing but the as and when you get the cash, you will record the entry. It's also, I can tell like this is going to be like a single entry bookkeeping. You might have heard, right? Single entry bookkeeping versus double entry bookkeeping of accounting system. So cash is something which is single entry. It will record only the transaction when it is happening. Cash coming into the business, you will write as a receipt. Cash going out of the business, you will write into your books of records. If something is happening like a transaction, just assume a transaction where you are buying something for the on something on the credit. Such things will not be recorded when we are using the cash method of accounting. On the other hand, the very widely used, we have accrual system of accrual basis of accounting. When I say accrual basis or mercantile basis, it is a complete system of accounting which take care of all the transactions, whether they are cash related, whether they are non-cash, but it has the impact, or you are expecting money, or you are going to pay money in the future also, but you have the information of such things, you will record all the transaction. So basically accrual system of accounting will keep a track of all the monetary transactions and as well as non-monetary transaction. As I gave example, right? You are a big supplier, you are a big businessman, okay? And now you want to expand. How do the people expand? By expanding their business. How do I expand my business? I expand my business by lending people on credit, right? I will give them something on the credit, and I'll create accounts payables. Okay. On the other hand, even I have to expand my business, I have to bring in so much of like what do you call stock. If I'm like some manufacturing unit, or I am dealing with some kind of manufacturing things. In such a case, I would be expanding my business by taking more on the credit now. There are many examples. I always take that. If you are a cycle manufacturer or a cycle seller, what do you do if you want to expand your business? What I do is I'll buy more number of cycles. Earlier, I used to buy 2000 quantity every month. Now I want to expand. What I do is I just talk to my supplier and say, boss, now I want to do a business on a big scale. Okay. So what I do is I just reach out to him and I'll tell him that if you can give me more on the credit, then we'll set up some limit. I'll make the payment on the regular basis. Maybe if you give me credit today, I will make the payment in the 3 months of cycle. Quarterly basis, I would make the payment. This is called the accrual bookkeeping system. Another example of accrual bookkeeping is accrual basis of accounting is salaries, right? Salaries, you book, you pay the salaries. What happens is the salaries in the Indian context. In the Indian context, if I talk about January month salary, let us talk about. Usually January month ends on the 31st Jan, right? But the salary gets paid on the next month. Feb 1st or Feb 5th, you must have seen that trend in the companies, especially when we are talking about India context. Salary is paid for this particular month, which is paid on the next month. So what happens here, if you are closing the books, suppose that for January month, I'm closing my books. Okay. So what I do is, as the accrual, if I am following accrual concept, what I have to make sure that I am booking that salary into my books. That is called the outstanding salary. You must have heard, right? That is the first item we used to have under outstanding salaries, right? So that becomes like outstanding salary we are recording because we are following the accrual system of accounting. If I am following the cash system of accounting, I do not do such transactions because I'm taking something on the credit. I do not record that. But do you think it would be fair if I do not book such transaction, which is of very huge values, very large amount is involved there. I'm buying something on the credit. I'm giving something on the credit for a certain period of time. But assume that if I'm not recording that, would my business would give the true and fair picture? Absolutely not. So that's because of that reason, accrual system is very famous and widely followed. There is something called as GAAP, 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 generally accepted accounting principles. Okay, so what they have done it, all the accountants, all the experts sat at a place. They decided to make some best policies. Then they came up with some rules and regulation which every accountant has to follow throughout the world. So for that sake, we do have US GAAP, 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 right? US GAAP we have separately. We have Indian GAAP. We may have Australian GAAP, but famous are Indian GAAP, US GAAP, and the IFRS, International Financial Reporting Standards. So financial reporting standard IFRS is like becoming famous nowadays because it has the points from the Indian accounting standard versus US accounting standards. Okay. So these are the three main which are very famous. One is Indian GAAP, US GAAP, and the IFRS. So whenever a company is formed, whenever somebody is doing accounting, they have to follow either of these three. Any of these three they have to follow. If you are following US GAAP, then you have to follow totally US GAAP. If you are following IFRS, you have to make sure that you are following IFRS completely throughout your books, throughout the years. Any questions on this, guys? You can unmute yourself and you can ask questions quickly. Assuming no question, moving on. Okay, so we have next thing is accounting equation. Understanding accounting equation is very important, guys. Accounting equation, we'll see what is accounting. So this is about the cash versus accrual system. You can just take a glance and see the things which we have, the difference which is showing the difference between cash versus accrual basis of accounting. Salim, you want to ask something? If you can unmute. Yeah.
Hi, Sami, like, could you hear me?
Good evening. Good afternoon.
Yeah. Just I have a doubt actually here regarding the gap. So,
Okay.
for example, if a company is in Indian,
Okay.
and for example, how exactly they will follow? For example, if a company have subsidiaries in many countries, for example, we can take an example of Deloitte, an example any other company. So if they have any business operations in US, Europe, and India, so how would they define the accounting standards, like gaps, whatever they're following?
Mostly where your company is registered does matter. For example, that this company which you're talking about, if that's an India-based company, then they are bound to follow India GAAP. And if it is that the company is registered in US, then the government from the US, they would expect you to follow the US GAAP. And when you are into US or any other country worldwide, you would also get the option to follow the IFRS. So mostly it depends on the where the company is registered.
Thank you.
Okay. Moving on to the accounting equation. If somebody has any good question, you can just keep putting on the chat box. I'll take it all together. Accounting equation is very important, guys. Accounting equation is like whenever we say equation, it's like it has the two sides. So first equation, as it says, all assets must be equal to the liabilities. Here people get confused. Okay, then there comes the second option where we are talking about having like multiple things, like three things which are of significance here. Okay, first thing is like assets, second is liabilities, and third is capital. Asset is nothing but whatever the business has invested somewhere. Business property, basically whatever business owns, that becomes the assets. It can be cash, it can be furniture, fixtures, machinery, or your cash, or if you are expecting some money from the people, if you have given something on credit, if you're expecting from them, that everything becomes a part of the assets. So at any given point of time, guys, all the assets must be equal to your liabilities. Okay, first thing is in the formula is liabilities. What is the liability? Liability is nothing but the liability is the responsibility to pay. The simple and finest definition I can give you is liability is nothing but the responsibility to pay. So whose responsibility to pay in this case? If you are doing the accounting, right? So that is my responsibility. Who am I? I'm the company. So this is the whenever you are talking about the liability, this is the responsibility of the company to make this payment today, tomorrow, or after 3 months or so. Anytime if I have to make the payment, then that would be called as liability. What all would come under the liability is your suppliers. You have to make payment to the suppliers. Okay, if at all you have bought something on the credit, then you have to make the payment to them. Okay, any other liability would be a part of that. And capital is also a kind of liability, guys, because why is the capital is liability? First, we need to understand what do you mean by the capital. Capital is nothing but the whatever the amount which is brought in by the owner is called capital. Okay, whatever the amount brought in by the owners or the equity shareholder, that is called capital or the equity. And another term for the capital is the equity. So why capital is considered as the outside? Why capital is considered as outside is because this is for the business perspective. It has to be outside entity. So this is liability. The business has to pay it to the outside people, and this is the business have to pay it to the owners. So both as a business perspective, these both things are pending and it has to be given out. So at any point of time, always remember my assets should be and must be equal to liabilities plus the capital. And at the end, we reach to this equation. If I take my assets and minus liabilities minus capital, that must be zero at any given point of time. Why it has to be zero? The question comes like why this equation should match and how it would match. The simple answer to this question is because we follow double entry bookkeeping of accounting system. Double entry means every debit must have equally and corresponding credit. Similarly, if you are recording any credit of say 100 rupees, then you must have a debit of 100 rupees. Simple. Make sense? So this is the reason that because of this reason only, all the assets must be matching with your liabilities and the plus capital. Hope this is clear or anybody has any question. This is very important, guys. If you understand this, this is the base of the accounting. Because we follow double entry bookkeeping system, because we have to book the journal entries, then this equation will work out and you should always remember this accounting equation at any given point of time. I will pause here to take any questions if you guys have. I'll just give you a few seconds.
Hi, Sami, Surendra here. So, so capital is considered as a liability.
Yes.
Okay.
And one more reason. Thanks for bringing this question. One reason why capital is considered as a liability. The reason is as per the business entity concept, right? The business entity concept says business is different, businessman is different. Business is different, owners are different. This is the very reason that you have to treat capital as a liability, right? That's the reason. Or else what the confusion it creates, guys, it would confuse you while you're recording the transaction. Just assume that owner is coming and taking some amount from the business. Now you would be confused, and he's buying some car. Okay, the owner is taking money from the business and is buying car for his personal use, not for the business use. Now you tell me, will this 10 lakhs, assume 10 lakhs he has taken from the business and to buy the car. Can you guys tell me whether this is a business expense or his personal expense? The answer would be his personal expense, right? This is nothing to do with the business. Okay, so this is the personal expense, then it has to be treated separately. That's the very reason the concept of business entity concept says whenever the owner is taking money for his personal use, take it from his personal account. Do not record such transaction, or just record it as a drawing as if he's taking his capital back. Do not record this as a business expenses. Okay, so the base of this accounting equation is also business entity concept. And why it has to match technically? The reason is we follow double entry bookkeeping of accounting system. Hope this is clear, guys. Yeah, somebody has written personal. Yeah, absolutely, guys. Moving on to the next and the important thing. Just a minute, okay? Okay, now the third thing was the, we were talking about the journal entries, which are the base of the accounting. Okay, whoever the accountant is there in the world, throughout the world, if they are calling them as an accountant, okay, they are calling themselves as an accountant, they must be aware of the how the journal entries are made. All the journal entries are made on the basis of some accounting rules. Okay, what we call as the golden rules of accounting. And there are three things we have there: personal, real, and nominal. And always, we already mentioned, right? We are going to follow the double entry bookkeeping system. What does it say? It says every transaction has a debit aspect and the credit aspect. It has to be receiving aspect and giving aspect. Okay, always whenever you are doing this thing, whenever you are preparing some accounts, booking some journal entries, there has to be a two-way transaction should happen. There can be no transaction which would have only one debit or one credit. Okay, every transaction must have two aspects, at least two aspects. It can have multiple aspects, but minimum it should have two aspects. One is receiving and giving aspect. So there are three things to remember, guys. Always remember, wherever you go, whichever company you work, whatever the position you reach, if you remember these rules, then that would be good for you to proceed in your career. So at any given point of time, you should be aware of these golden rules. So there are three, all the accounts are categorized into three things, three types. Either that account should be personal, real, and nominal. Personal account, when we say personal account, this is the personal account. Let me remove this. Okay. Okay, this is a chart, guys. Personal, impersonal, they say. Some people call it as impersonal. Under impersonal, we have real and nominal. So what all would come under the personal accounts? So first thing first, the personal account would consist of natural person. Person like you and me, that would be a natural person and would be a part of the personal account. Artificial person is nothing but all the banks, institutions, and any clubs, any NGO, any company, any trust would be a part of the artificial person. That would be also a part of personal account. About the bank, people are like confused, or they have difference of opinion here. Some would consider bank under personal account, some would consider bank under real account. Okay. Third thing I have is representative personal account. This is understanding. This is very important. Understanding this is very important. All these accounts, remember, if you are unable to understand the logics of it also, just remember what would comes under the representative personal account. Outstanding salaries account, outstanding rent account, okay, all would come under representative personal account. Why they are called as representative personal account? For example, if I'm saying outstanding salaries, so this account is related to salary, which is representing some group of people, my employees. For example, if I am the company, I have some 100 employees. When I am recording something at the outstanding salary, so that particular point or the terminology is representing my 100 of employees. I hope this is making sense. Same goes with the prepaid expenses also. Prepaid expenses also. Prepaid expenses is something which you have paid in advance. You had to pay some rent because you have got some more money this time. What you have done is you have made the payment in advance. You had to pay 5,000 each month for what you have done. You have got some money. You made the payment for the another 6 months. So such thing would be recorded as an asset and would be a part of your prepaid expenses. And that is also representing my owner, right? The owner of my building, of the campus, under the prepaid expenses. That is why this is called representative personal account. Real account is all the tangible or intangible assets. Tangible assets are nothing but the assets which can be seen. I am working on the laptop. This laptop is an asset. So as we discussed already, assets is nothing but the whatever the company owns, that becomes the asset. So this laptop is a tangible, I can touch it and I can see it with my naked eyes, that becomes the tangible asset. Cash, I can see that cash in my hand. Machinery is there, equipment is there, something is kept there. Okay, my building is there, plant is there, where I work, my machinery is there. So that everything becomes my tangible assets. Intangible assets is nothing but the like a kind of goodwill, patents, okay, copyrights. If you have built something, some software you have built, and you would have some copyrights to that, right? So that copyrights would be a part of your assets because that is your property that has been registered. Same goes with the goodwill also. So what is goodwill? Goodwill, that's the name and fame of the business. If at all you want to sell your business today, you would not sell it at the cost. For example, you have for setting up one big company, it might have cost you some 10 crores. You will not sell it for the 10 crores. You will add some value to that. That value, the additional value which you are attaching to your business, that is called the goodwill. Okay. So that would be a part of your intangible assets. Nominal accounts are very simple, guys. It is expenses on losses, incomes and gains. Any types of expenses, any types of losses, okay, any types of incomes, any types of gains would be a part of your nominal expenses. So when we book the accounting, when we book the general entries, then you should be aware of this classification of the accounts. Okay. So now I move to the another slide. This is something for you to read if you want to. I have given some examples here. So this is about the personal, natural person, artificial person, and representative accounts. These are the names, okay? And these are the representative person accounts. Real account, as we discuss, any asset which is tangible, intangible, any property of the company would be a part of your real accounts. Nominal accounts, as we discussed, salaries, rent, any kind of expenses the business has paid. Now the golden rules. Golden rules simply says for the personal account, it's a debit the receiver, credit the giver. This you must have already gone through when you are in intermediate first year itself. And if somebody from different background, they must have done during their graduation first year. What is the rule of the personal account? Debit the receiver, credit the giver. Write on the debit side if somebody is a receiver. If somebody is giving, then write them on the credit side. Simple rule. There is no rocket science here. Simply real account principle is debit the item which is coming into the business, credit the item which is going out of your business. Simple as that. Something is coming to the business, write on the debit side. Machinery coming to the business, write on the debit side. Machinery is going out of the business, you are selling, write on the credit side. Simple rule. Nominal account, as we discussed, it deals with the expenses and losses, incomes and gains. So what we have to do, if at all you are receiving any expense and losses, write on the debit side. If you have some kind of income, then write on the credit side. Simple. If I'm getting some interest from the bank, okay, that's an income for me. What I have to do, I should be writing on the credit side because that's a kind of income. Now I have one exercise for you guys. We have 37 odd people here, including myself. So can you guys just put it on the chart one by one? Okay, let me put it in this way. Furniture, is it a personal, real, nominal? You guys can quickly put it in the chat box very quickly, because this is very simple exercise. Many people are writing furniture because it's a real account, because it's a furniture is an asset. If you could add the logic also, that would be good, guys. Okay, very good. Tangible asset, very good. Cash, is it a personal, real, nominal? Real, if you could add the reason also, that would be, I would be more happy, because that signifies that you have understood that. Real, this is not real, not nominal. Somebody has written nominal. All assets would be at any given point of time if they are real accounts. All tangible and intangible assets. Right, perfect. Rent paid. So when I'm paying some rent, this is expense for my business. Okay, expense for the business. So where the expense would come? Nominal. Why? Because we have to debit on all the expenses. Nominal account. Yeah, fair enough. Insurance premium. So insurance premium, to give you a background, this is kind of, if you buy some insurance, then you have to pay the premium. Every month you pay some amount. So is it real expense, like personal or nominal? All expenses would be nominal account. That's the reason this is a part of your nominal account. Absolutely right, everybody. Stock. Stock is something which is related to my business. Okay, that is something tangible, I can say it. For example, if I'm a manufacturer or seller of cycles, then if I'm getting cycle into my business, that becomes my stock. So where would it come? So yeah, it's a asset and tangible assets. Then is it a personal, real, nominal? It's a real account, right? Simple. And the simple logic to follow for the assets. Once you know this is an asset, then blindly you can say it's a real asset. Yeah, this is perfect. Redmi 6, I don't know what's the name, but yeah, that's a good answer. Accounts payable. Accounts payable. Accounts payable is something which I am buying something on the credit, and I have to pay it to the supplier. For example, I'm buying cycles on credit, and I'm liable to pay it to somebody. What kind of account it is? Is it the expense, or what it is? Or it's a liability? I think you have to, yeah, many of you are writing it as a liability then. Okay, when I say liability, we did not discuss that where the liability would come, right? If you can just think, and you would get the answer. Okay, it's a personal, real, nominal. Just think that where we discuss this kind of accounts. Nominal, okay. This is, okay. Okay, when somebody say personal, which personal? Is it like a artificial person, or it's a natural person, or the representative? So it's a part of representative personal account. Okay, represent, because this accounts payable represents some group of suppliers, or maybe one or two suppliers, from where I am buying some cycles in my example. Okay, so it's always remember, guys, don't confuse yourself. This is not the expense. This is the accounts payable. This is the liability. This is if you want to fit this into the personal, real, nominal, then it would be a personal account, because this is called as representative personal account, as it is representing my suppliers. Hope everybody is clear of, or anybody would like to raise any question here, because this is very important in terms of when you book the journal entries. If you don't understand this logic, then you don't understand value book, because you treat this as an expense and you will write this on the debit side, whereas all the liabilities would have the credit balance. So it would go in the opposite direction. Expenses has on the right hand side like a debit balance, whereas the liabilities would be on the left side showing the credit balance. Just type in the chat box if you guys are good. Okay, moving on. Capital. What is capital? Capital is nothing but the amount which is brought in by the owner. Simple logic. And you must be asking me, what in case of joint stock company, where there might be many people? Yeah, those many people, the equity shareholders, would be called as the owners. So whatever they bring into the business, that become capital. Now tell me, what is capital? Where do you fit the capital? Whether you would fit into the personal, real, nominal, where do you put that?
It will be real account.
Real account, the reason?
Since capital is coming into the business.
Capital is coming into the business. Okay. Everybody wants to follow that. People writing, is it an asset? First tell me. If somebody is telling me it's a real account, is it an asset? Is it something the company or the business is owner of that thing? Not really, right? It's a liability. Salman Nusrat has given that answer. It's a liability, guys, right? It's a liability. Liability. What is the definition we discussed about the liability? That's a responsibility to pay. We said that for the business, I am the business. For me, capital is something outside. Liability is something I have outside, which I have to pay to the other people, and the capital I have to pay to the owner. For me as a business, both are the things I am payable. So when we are able to understand that capital is the liability, then we can say that it would be a representative personal account, right? Can you tell me who this account is representing? Can you put it on the chart? When I say capital, this is representing whom? As in another example, I gave the example of salaries, right? Outstanding salaries. So outstanding salary account was representing my employees. So who the capital would represent?
Investors.
Investors, owners. Yeah,
Owners.
absolutely right. Shujauddin and Nitin, you have all given the answer. Yeah, it represents the owner, partners, you can call it, if it is a partnership business. Okay, the owners of the company or the business. Absolutely right, guys. I appreciate that you guys are putting it in the chat box. There the differences. You have to ask yourself some questions. Okay, when I say capital, first you need to understand what do you mean by this. Okay, now you understand that capital is something which is brought in by the owners. From the business perspective, where do you want to fit in? Is it an expense? Is it an asset? If the answer is no, then absolutely that's a personal account. When we say personal account, capital account itself, that is not the natural person, first place. Okay, second, that is not the artificial entity also. Capital is not the entity as if, right? The third thing, the only option remains now is the representative personal account, and that pretty much suits this definition also, because this account is representing my owners. Moving on. Interest received. Give me the reasons also, guys, when you type in the chat box. If you say that's an income, that's absolutely right. Income is not an asset, Shuja. Okay, this is income received. You are putting your amount somewhere and you are getting interest on that. So it's a interest is an income, not the assets. Asset definition is whatever you owe, whatever you're the owner of, whatever the company or the business is the owner of any particular thing, tangible or intangible, that becomes the asset. This is the kind of income, right? So somebody, Kalpana, writes income received is an indirect income. Yeah, it's an income, but right. So where do the income come? Is it a personal, real, or nominal? Somebody has already given the answer. It's a nominal account, right? Because we discussed that nominal account would consist of all the expenses, incomes, and gains and losses. Absolutely right, guys. I appreciate your answers. Other assets. Where do you put the other assets? Personal, real, nominal? Would you mind keeping putting on the chat, guys? Okay. Real account, because the reason is very simple. All the assets would be the real account. Simple logic. You don't need many things to understand this. Simply put it, you can ascertain that if it is an asset, that has to be a real account. Absolutely right. Tax payable. So whenever you see such items, guys, ask yourself some questions. Start with the nominal, I would say. Payable, I'm saying. Tax payable, I'm saying. I'm not saying I have paid. When I say I have paid salary, I say paid rent, I have say paid tax, that becomes expense. Okay. When I say something is payable, that becomes my, can you answer that? Whenever I say something I am payable, what it becomes? Liability. Absolutely right. Whenever I say I have to pay something, I have to pay him or her, I have to pay it to some business, I have to pay my supplier, I have to pay to my employees. I have to pay, right? The definition, just look at the definition. I have to pay. If I ask you the definition of tax payable, payable means something which is going, the event is going to happen in the future, not today, right? That becomes my tax payable account. Okay, payable is a liability. Okay, when I say liability, it would be a part of the nominal account now. The answer is no, right? Because that is not the expense, that's a liability. Will it be a part of your real assets? The answer would be no, because this is not the asset, this is the liability. The only option now, you are left with the personal account. Again, personal account, it is a not the natural person, not the artificial person. This is the your representative personal account. Now, whom does it represent? Now the question comes, this account is representing whom? Tax payable. Government, right? Anybody else? Anything? Any specific term you want to, guys, you want to use here? Whom does this accounts payable is representing? Income tax department. Can I say income tax department, right? So this tax payable is representing my income tax department, in simple words. I think the last one, depreciation. Depreciation, where do you put the depreciation?
Regulators?
Yeah, regulators also. Yes, absolutely right. Now we have moved to depreciation. Now, what is the depreciation? Reduction in the value of asset, right? So that's basically is a expense to the business. An expense would be a part of your, without a second thought, it's a part of your nominal account, right? Simple, very simple. Let's moving on. Drawings. Okay, drawings. What do you mean by drawings? Drawings is something when the owner is taking something from the business. Okay, whenever owner is taking something from the business, it's called drawing. Whenever he is giving it to the business, what do you call that? This is becoming very interesting now. Whenever is owner giving amount to the business, is called capital. Simple. Whenever he is taking money from the business, it's called drawings. Simple words, guys. Yeah, somebody might typed in the chat box also. Whenever taking something, owner is taking, you have to be very specific. Whenever the owner is taking something from the business, then that becomes the drawings. Okay, I would call that as a representative personal account. Okay, because drawing is not the natural person itself. If I call something, any transaction as a drawing, that drawing word is not the actual natural person. Neither it's a company or something. This is representing. Okay, drawings representing whom does it representing? Drawings account. investor. Okay. In other words, which we have talking since the start of this session, that's a owner, right? So drawings will be from capital account. So whenever the owner gets, you will write on the capital account. Whenever he takes from the business drawing account, yes, that would be a part of capital account. You would take it from the, you would maintain just one account of capital, and whenever he's taking, you will write as a drawing. Whenever he is getting into the business, that would become the addition to the capital. Yes. Hope it is clear. Anybody has got any quick question, then I can take that. Just I'll give you some couple of seconds for the questions if you guys have. Because these are the things which we are going to repeat when we are discussing the journal entries, guys. I would be asking the same questions and you will see how this is relevant for booking the journal entries. Okay. Okay, drawing what, why under representative account, not personal account. Personal account is nothing but the, it consists of natural person, right? There are three categories we discussed. Natural person. First thing is natural person means when you are taking the name of the person. Okay, Ali account, Ali is doing something. Salim account, if I'm taking from the Salim, okay, then all this will become natural person. If there is an entity, it's a company, it's a trust, okay, then it becomes the second part of that, artificial person. Third thing is representative personal account. Something which is not falling, something is personal account, but not falling in 1 and 2 categories, that automatically move to the third category, which is representative personal account. Similarly, how you are doing with the capital, right? When you are, the owner is getting into the business some amount, what we are using the word? We are using the word capital. What would happen? Your question is good now. Why we are using the different terminology here? For the capital, we are using, we are not using the term liability, we are using the term capital. Just to differentiate between the outside liability versus inside liability. For the business, I'm the business. And you have given me something, I'm writing that whatever you are giving me as an owner, I'm writing that as everything under as a capital. If you're taking something from me, I'm writing everything as a drawings. So that drawings account, that's a capital account, both are representing you as the owner. Okay, that's the reason we are taking it as a drawings account and calling that as a representative personal account, not the personal account, not the artificial person. As drawing represent capital account, yes, you can say, because when you do the accounting, right, you do not usually maintain drawings account separately. You just deduct it from the capital account. You bring in some capital, you will add to that. When you draw something, you will deduct from the capital. Somebody?
Yeah, just have one more doubt in that drawing. So in capital, like in capital, we had profit and reducer drawing. So how exactly, in terms of drawing, what exactly they will sell the shares and that will called as a drawing, like a no, how drawings will be?
Yeah, that's a good question. So what drawings we are talking about, that is in case of sole proprietorship business, where there is a particular person is there who is doing, for example, I am doing some textile business. So I'm the owner, I'm getting into the capital, anything. So if I'm doing a business at that level, that would be, I would be using such terms, drawings and all. But if in case of the companies, right, I don't think so there would be some drawings, because if it is a public limited company and it has got its shares onto the stock exchange, then one person would sell the shares and then another person would buy the shares and become the owners. So there won't be any such a drawing as such. It is would be just change of ownership and change of the capital from the person A to person B. So term drawing would not be relevant when we are talking about the any public limited companies where they are registered on the stock exchange. Hope this makes sense. Okay, just allow me 1 minute, guys. Just 1 minute. Okay. Okay. Let me open my video also. Okay. So we would be discussing now the types of journal entries. Okay. Explain depreciation once. Depreciation is nothing but the reduction in the value of the assets. Tangible assets is called depreciation. For example, if you have bought some furniture at the start of your business for say 5 lakhs, after 2 years or so, if you want to sell that furniture, do you think you would get the 5 lakhs or the 4 lakhs also? I would say you won't get 3 lakhs also, right? Usually it so happens. So this reduction in the value of the asset, right, is called the depreciation due to wear and tear, due to use of that asset, whatever the value changes. So US GAAP or whatever the GAAP basically or accounting standard would allow you to show that reduction in value as a expenses. Every year you would have some kind of small expenses which would be you can show as a expense on the profit and loss account. That is a depreciation. Okay. Okay, that's a different topic altogether, Salim. I would take it separately. Okay. Because that's all formula based and anything. I have very less time. So I would stick to the topic and we can get in touch separately. So we are discussing now, guys, what are the different kinds of general entries we have. Okay. There are 3 categories. There can be different ways people would call it as. There is no hard and fast rule that only these 3 are the like accounting like type of journal entries. No, it can be different way of putting the things. So what I as for my experience and knowledge, I would say there are three types of journal entries we have. Okay, one is very simple journal entries. Okay, simple as the name is simple, it would have one debit and one credit. Salaries paid, it would have one cash, one salaries. That is called simple journal entry. As the name says, simple journal entry is a one debit, one credit, just to remember. Second we have is compound journal entries. Okay, compound journal entries is the when I say I have one debit, 2 credits, one debit and 2 credit lines, then that would be a compound entry. Or in the other way, it can have 1 credit and 2 debits. You might be a little confused, those who do not know the depth of the accounting. The example would be discount received. Okay, you are buying something and you have got some discount. So what would be that discount? Would be an income or expense to you? If you are buying something and you are getting some discount, that value of that particular thing was 10,000, and because you got some discount, you are paying only 9,000. So that becomes your income. As people are typing income, right? So everybody is on the same page. That becomes my income. So that's the income. In such a case, you have to record, if you want to record that discount also into your books, then you would be having 3 lines there. Okay, you would have purchase account, you would have cash account, and you would have discount received account also. So in this case, you would have 1 debit, 2 credits. Similar way, if you are giving something to somebody on a discount, the total bill was 15,000, but because of your relationship with them, you want to give them say 14,500, 500 discount you are giving. So is it income or loss to the business or expense? When you are giving a discount to somebody, that becomes expense, right? Expense, yeah, I would call it rather than loss, I would say expense, because loss is something when you do something and you are incurring loss. This is deliberately we are doing it. So I would write this under expense account. So in that case also, you are allowing discount, you are giving a discount to somebody, and that is the expense you are saying, right? So expense would be on the debit side. So expense account, cash account, you would be getting the cash, and two sales account. In this case, one credit, two debits are there. Am I making sense, guys, or it's going bounce? Can you type in? Yeah.
Sami, just a clarification. So in this case, I think it should be a loss, right? Yeah, expense you're saying. So.
This is loss in the sense why I'm not calling that as a loss. Loss is the term, right? We use when you are investing somewhere, okay, and you are incurring. If you are getting less value, you would be calling it as a loss, okay. In the other words, okay, you have given something on the credit, and that supplier is unable to pay, okay, then that becomes your loss. If you go by the definition, this would, I'm calling this as an expenses, because this is something I am no, this is known to me. If something is known and I'm calling that as a loss, that there are two different things happening here. Because I'm saying this is a loss, but I'm doing it with my own hands. I'm writing myself, okay, boss, I'm giving you some discount. And such thing, I cannot call it as a loss. That's a difference of the
Loss and
opinion, I would say. But yeah, in terms of the treatment, both are same. Okay.
Okay.
Complex journal entries. You can guess it, I think, by now. Complex journal entry would be wherein you will have multiple debit entries, multiple credit entries, multiple lines in the debit side, multiple lines on the credit side. That the name also says complex. That becomes a complex journal entry. If you guys know any examples of such entries.
I have one. Can I?
Yeah, sure. Go ahead.
For example, dividend. For example, invested currency is in KRW, and I got a dividend in assume you can say USD currency, and the actual fund is in EUR currency.
Okay.
Like how to?
So what does it have? The line items?
No,
you're asking or telling?
I'm asking you a question, and I am not sure about the journal entry. How to?
Oh, we have not started journal entries yet. Okay. We are not started journal entries yet. This is, I'm just giving you the types of journal entries. The next session, next step, we would discuss the journal entries. This is just, we are discussing the types. Okay. Are we good so far? Just type in yes so that we can move forward. Guys, just allow me 1 minute. I'm going to use my some big screen is there. That would be very convenient for me and for you also. Just allow me 1 minute and be online. Okay. Just 1 minute, guys. Guys, I'm trying. Hello. Guys, can you see me? If you can type in the chat box.
Chat box also can raise the hand.
Yeah, you can do whatever.
Yeah.
Guys, are you able to see me? Yeah. Oh, this is the surprise I had. Which I was ready for. Can you just type in the chat box or raise your hand if I'm audible properly, and I can move with the session. Can someone in the type in the chat box? Not audible. Somebody saying not audible. Is it good? Somebody can confirm me. I hope this should be good, right, guys? Just one or two people can type in so that I can start. Okay, all says good. Okay, I take the majority, which people say yes, now good. Okay, fair enough. So we discussed about the types of journal entries case. Okay, now we'll move on how to write the journal entries. I have a couple of examples on my laptop, then I'll take it and move it forward. Okay, so there are certain steps after we discuss there are types of entries, right? Simple. Compound. What was the last one?
Complex.
Complex. Okay. We'll start with a simple entry and we'll see how it is made. First thing first, we'll take a very simple entry. Let us go with the salary, which is very easy, right? Easy to understand. Somebody is paying a salary. Salary is paid. We have to follow certain rules here to book the journal entries. First rule being is identifying the accounts. Identify what all accounts are involved into that. What are the accounts involved with that? Then the type of account. Type of account, when I say type of account, is a personal, real, nominal, you have to understand. Account type, I can say. Right? First, you need to identify the accounts involved. I would say accounts involved. Second is accounting type, whether it's a personal, real, or nominal. Then the apply accounting rule. Apply accounting rule. Third thing is recording hours. Simple, as simple as that. If you follow this, then you'll see how the entries are coming up. So in our example, we said that we are starting with the salaries paid. So first, what is the first step? We need to identify the accounts involved. What are the two accounts involved? As we are following the double entry bookkeeping system of accounting, at least there has to be two accounts involved. So when we are paying salary, what are the two accounts involved? Can somebody say?
Cash and salary account.
First is cash, next is
Salary account.
salary. So by this, we have done our first step. We have identified the accounts involved. We are done. Second step, account type. When I say accounting type, is that it's a personal, real, nominal. Cash is a personal, real, nominal.
Real.
What is that? Cash,
Real account.
real account. All assets should be real account. Everybody agree? Salary, personal, real, nominal.
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 All expenses should be nominal, and salary is an expense, it's a nominal. What is the third rule? If you can, guys can see on the board. What is the third rule we have to follow?
Apply rule.
Apply rule. Let us apply the rule. So first step is done. Second is done. Now the third step. Whenever we say real account, what is the principle of real account? Somebody can tell me quickly.
Debit what comes in.
Debit
What comes in, credit what goes out.
Credit what goes out. Cash, when you pay the salary, cash comes in or goes out?
Goes out.
Goes out. Simple. You are paying, it is going out. So what does it say? What comes in, debit it. What goes out, credit that. What does it mean? If you are getting something, write on the debit side. If something is going out, then write on the credit side. In this case, cash is going out, then you would write on the credit side. Cash on the credit side. Whenever we write the credit side, we write as a true cash. If you guys remember that. Don't tell me the journal entry now. We'll create this. We know the logic of this also. Second is second part of the entry. This salary is a nominal account. What is the principle of nominal account?
Debit expenses and losses.
Debit expense. What does it mean? Put or write expenses on the
Debit side.
so my debit side always comes on top, right? If you guys remember. Salary account. Debit to the cash account. So we have followed. You have followed 4 steps here. First step, we identify the accounts. Second step, we identify the types of account. First, type of account, identify the account, then the type of account, then we apply the rule. Golden accounting rule we have applied here. Then we wrote the journal entry here. Okay, does it make sense? Do we have the entry in place now?
Yeah.
Salary account data to cash account. Is it that simple or it is confusing? Anybody has got any question you can ask? Any questions on this? Just a moment. So assuming no questions, guys, moving on. I'll take one example of this is the salaries paid, right? Another example, rent received. Now you guys will tell me what we have to do. Now tell me the first step. What was that? Identify
the account type.
accounts involved. So when we are saying rent received, what are the two accounts involved?
Cash.
Cash is
Rent
there.
and income.
Rent and income. Okay. Rent received is the income, right? That's the one item. Agree? So that's a one item which is rent, which is income. Another one is cash. If you have given your property on the rent, then you will receive some rent in the form of cash. That becomes your income. We are done with the first step. Identify the accounts. You have identified. What is the second step you have to follow?
Account type.
Accounting type. Now you guys tell me what is the accounting type for this? Cash is personal, real, nominal.
Cash.
Real.
Real.
Real account. I'll write real here simply. Rent we are receiving.
Nominal account.
Nominal.
It's an income, so it's a nominal account. You guys want to know. Second step is also done. Okay. What is the third step? Apply the golden accounting rule. What is the rule for real account?
Debit what comes in, credit what goes out.
Debit what comes in, credit what goes out. So cash is coming in or going out in this case?
Coming in, we have to debit it.
Coming in.
Coming in, I have to debit it. Okay, maybe I can write the rule here. Okay. Coming in, I have to write on the debit side. So my entry is cash account debit. I know what I have to write on the debit side. Now, you guys said rent is the income. Income is a part of nominal account. What is the principle of nominal account?
Credit all incomes
expenses
and
and
gains.
losses, credit incomes and gains.
Yeah, if there is a debit expense, debited losses. If there is an income or gain, just credit that. In this case, is it an income or the expense?
Income.
Okay, it's an income, right? So income, what I have to do? Credit or debit?
Credit.
Credit.
Credit side, simple. To rent account. That's it. Your entry is ready. Simple. If you follow these steps, guys, then you will see the entries coming automatically to you. Does it make sense? If yes, then I'll move forward.
Yes.
Okay. Now, I'll take another scenario to make your life easier. Outstanding salaries entry. This is my favorite entry when I take interview for the freshers. I always ask this question, and many of the people I've seen, like who takes the interview, they do talk about this. The term is outstanding salaries. Outstanding salaries. Can somebody tell me what does it mean? Is it the salary paid or something else?
Salary paid.
Payable.
Payable. In other words, I can call this item as salary
Payable.
payable. Is it a present case or the future case, guys?
Future case.
Future, which is not done yet. I have to pay salaries to my employees maybe next week, but I want to record it today. That's where the accrual concept come into picture, right? If I want to do something in the future, but I want to record it today, that's accrual concept. That's the difference between accrual concept and cash concept. Even though I'm not receiving any money today, not paying any money today, but still I want to record in my books. That is called my accrual answer. Okay, coming back to the question. Outstanding salaries or the salaries paid. Now, let us apply the same rule. I will ask the people in the interview, or the people ask, what is the general entry for the outstanding salaries or the salaries payable? Now, guys, just add it here. When I say salary payable, this is just an example. It can be audit fees payable. It can be legal fees payable. It can be any rent payable. You can apply this logic, what we are going to discuss, in any of the fees, any of the expenses. That would work out. So what are the 4 things we have to ask? What was the first thing? To start the general entry, identify the accounts involved. Right? Now tell me, what are the 2 accounts involved in the salaries payable?
Cash and salary paid.
Cash and salary.
When I say salaries payable, guys, don't
Okay,
get
okay.
confused. I'm not paying anything, but I'm recording. There is no cash. I'm not giving any cash to anybody. Then how can I write that? So cash is not involved. First thing first.
Salary and payable account. Salary and salary payable account.
Okay, absolutely. Who is that? Can I know your name? Who said that?
Accrual.
Akram. Yeah, that's right. So you said salary.
Account data to salary paid.
No, I'm not writing the journal entry. We are identifying, we are doing the first step here. Identifying the accounts involved. What are the 2 items? Are there? Salary is the 1 item, and the outstanding salary.
Outstanding salary.
Or if you guys are good, then I can write here salary payable. Okay, let it be. Also, salary payable. Salary payable. Yeah. First step is done. Are we good? Anybody has not understood this question? Then, taking this, identifying these 2 things, can ask now. Because if you understand this, next steps are very simple. Just confirm me if you are good here. Because when we are writing something, right? When we are saying outstanding salaries, for example, till date, I have paid some 10,000 of salary. Now for the next 1 month, I want to record it today itself. Say 5,000, 10,000 already paid, and 5,000 is still I want to record. So what would be my salary account would show? Will it show 10,000 or 15,000? It should show. If I'm recording salary, I'm increasing salary, right? So would it be 10,000 or 15,000?
15,000.
15,000. Yeah.
5,000 under salary payable.
Payable, right? Absolutely. But my salary should be at the end of the day 15,000. Correct? 15,000 salary account. That is the reason I'm saying there are 2 accounts involved. So don't get confused why we are taking salary, because salary also would increase. Your expenses would increase from 10,000 to 15,000. Outstanding salary, whatever the extra you are booking, that would be that amount. Don't get into the details, but if you are understanding why I am taking these 2 items as a part of identifying an account, that's more than enough. What is the second step?
Account type.
Account type. Now you guys tell me what is account type of salary?
Nominal
account, representative account.
No, 1 by 1. So salary is an expense. I'm writing here just to put clarity. It's an expense and it's a nominal account. Everybody agree or anybody disagree? Can tell me.
Yeah,
It's an expense. It's expense. It's a nominal account. The general rule, everybody understand that. Next comes the salaries payable or the outstanding salary.
Representative account.
Representative personal account. Anybody, any other thoughts? Why not? It should be also a nominal account.
It's an expense nominal, but it's yet to happen.
Yeah. So what can we call that? call it as if something is yet to happen?
Uh,
Or to be paid, in other words, what can we call it as?
Outstanding.
Liability.
Liability. Liability, right? It's a. Is it not my liability to pay it? What is the definition we discuss about the liability? If somebody is there in the session since beginning.
Represent responsibility to pay.
Responsibility to pay. If I am writing something today, is it not my responsibility to pay next week, next month, whenever it is? Yes or no?
Yes.
Right. So it's a liability for me. Today, tomorrow, next week, next month, whenever I have to pay that. So this become my liability, guys. Okay. So what is the type of account? Personal real nominee. We discussed this in the previous session, right? In the previous
It's a representative account.
representative personal account. What is that? Personal account under the representative personal account. Everybody agree or any confusion here?
No.
No, sir.
Fair enough. Now, what is the next step? We have done this, identify accounts, accounting type also. Third is
Apply rule.
apply the rules. Let's see if we can apply that. Nominal. What is the rule of nominal?
Debit expenses and losses, credit incomes and gains.
Simple, very simple. If that is a expense, write on the debit side. Is it an expense? Yes, it was expense. Write on the
Debit side.
okay. Guys, we are not don't want to be like blindly do the things. Like first, I know debit, automatically other thing would come on the credit. No, let us not go by that way. We are here to understand the logic why something on the coming on the credit side also. Okay, if you understand this, then you are the master, I would say, in the accounting general entries. If you are able to say why something is debit, something is credit, then you are halfway there already. Okay, salary we know. Now the next thing is salary is payable, and it's a liability we said, and it's a representative personal account. What is the rule for that? Personal account rule.
Debit what comes in, credit what goes
Debit the
out.
receiver, credit the giver.
Debit the receiver, credit the giver.
Yeah, you have to go back to your first class, intermediate to first class. Okay, to remember these things. It has to be on tip of your tongue. Whoever like aspires to be an accountant, right? You want to excel, so you should know these formulas, right? Personal account, debit the receiver, credit the giver. Now, a real account, debit what comes in, credit what goes out, nominal, all expenses on debit, all expenses, losses, credit all incomes and debts. So, personal account rule is debit the receiver, credit the giver. Then, when I'm saying salary payable, is it who is the payable? We don't see any receiver or giver, right? Do I have some receiver given here in this entry? Or how come this entry would be receivable payable? Would come under, like I said.
We are paying salaries, so we have to give. So we can record it as credit the giver.
Okay.
So since salary is payable to any person or employee, so there it comes as a representative personal account.
Okay.
Here we are gifts.
The question here is, as per personal rule, debit the receiver, right? Credit the giver, correct?
Yes, sir.
In this example, how do you fit in this salary payable? We don't see anything, something is coming in, not somebody as a giver or something. Logic is missing here, right? For that, we have the solution for that. And people can give some reason here, but to make the thing simple, I will give you one reason that you can remember. Always remember one table. The table is expenses, losses, assets. This is one group. Another group is income,
Gains.
gains,
Assets.
liabilities. Assets already have written, right?
Yeah. Sorry.
Liabilities, capital. This is one group, right? These are two groups. Always remember this. By nature, these are all debit balance. By nature, these are all credit balance.
Credit balance.
This, guys, you need to remember this. This table, if you remember, then this will help you in writing the journal entries. By nature, any expense, any loss, any asset would be debit balance by nature. By nature, like something can be black, something can be white, kind of, right? By nature, there are certain things. So expense, loss, assets, they come into the debit category. Their nature is debit, and all incomes, gain, liabilities, and capital by nature they are credit. Hope this is clear, guys. Then I'll move forward.
Yes, sir.
Yes, sir.
Yes, sir.
Now I'll tell you how to fit this into this. What is salaries payable? Is it asset, liability, expense?
Liability.
What?
Liability.
Liability, right? Is it a liability? So what is the nature of the liability?
It should be in credit side.
Credit, right? Because the nature, this is the first time, assume that is the first time I'm booking this. So what I'm doing, I have to create one liability, right? And the nature of the liability is credit. Simply I write this item on the credit side. Salaries
Payable.
simply. If you are confused, you don't know how to apply this logic in the last step. Till 3 steps, you are good. Easily be identified, easily be sorted into the accounting type, accounting rules. Here we start. Okay, then there can be savior. This table has come, which is helping us. So salary account, we were able to apply the logic and write on the debit side. For writing on the credit side, we were not clear. There would be possibility to give the logics here, but my way of doing thing is like want to make it simple. So what we said, salary payable is the liability account. Then the liability, nature of the liability is credit. Then I am writing on the credit side. Hope this is clear, guys. Because if you understand this entry, then almost you are there. Almost you are there. Any questions in this?
No, sir. No.
No. Is it clear?
Yes, sir.
So I have one doubt.
Yeah.
So any journal entry, can't it be on the same account, like within real account? Can we have a journal entry like a debit and credit?
Okay. Yeah. Both accounts are real. You are saying?
No. In one journal entry,
Okay.
can there be one
Two
single
real
account?
accounts. You are saying that two real accounts are there.
Yes, that
Yes,
way.
yes, it could be simple. Yeah, can anybody wants to take this before I say? Any example where both the accounts are real accounts? Very simple.
Contra entry,
No,
cash
no,
and bank.
no. That's a
Just
very
purchase of machinery in cash.
Purchase of machinery, right? Purchase of machinery. What are the two items involved? If the person who asked the question, you can give answer. Okay.
Yeah.
What are the two items involved in machinery?
Machinery and cash.
Cash. Machinery, what account it is? Real account?
Real.
Real.
Cash is?
Real.
Apply the logic, one would go, cash would, when you buy the machinery would come into your business, cash will go out of your business. Simple. There can be repetition, single entry can have the same rule for both the items. Are we good, guys? I'll take another example of this sort to make you understand. Okay. Assume that we rent. Okay. I have a big building. Now let us take prepaid expenses. Okay, what is prepaid expense?
Prepaid expenses is the asset.
No, I'm asking what do you mean by prepaid expense?
Expenses which are paid in advance.
Expenses
in
paid in
advance.
advance. For example, I had paid rent. I had to pay rent, and because as I already took this example, I got some cash, so I wanted to make some payment in advance.
Yes,
So my
sir.
monthly rent is some 1,000, but I got some money from outside, so I just made the payment for the another 6 months also. So 5 plus 1, I have made total payment of 6,000 today itself. Okay. Okay. Now let us see what are the general entries we can make out of this. Prepaid expense. What are the what is the first role? First step?
Identify.
Identify the accounts, right? Prepaid expense, what are the items we have?
Cash.
Okay. Okay, why we are telling cash? Because I have taken example of we are paying it today.
Yeah.
Okay. So it will have multiple accounts now. First is cash. Next is
Rent.
rent.
Expense.
Yeah, that is rent, right? Next, one more is there.
Asset.
Rent in advance.
What is the name of that asset?
Prepaid rent.
Prepaid.
Rent, prepaid, rent paid in advance or prepaid rent,
Prepaid.
right?
Prepaid salaries.
No, we are talking about rent now. Okay. I have made payment for the rent. I am talking about rent now. So there is no question of any other expense, no salary. We are talking about rent. Somebody said, right, rent paid in advance. Yes, you can use this terminology and you should know this. Paid in advance. Rent paid in advance. So basically there are three things involved here, actually. Okay. What is the second step?
Identify the account.
Identify. What is that? That was the first one, right? Identify the account. Now the type. Accounting type. Okay, I'll write it here in order. Okay. What is the accounting type for cash?
Real account.
Real.
Everybody knows it's a real account.
Nominal.
Expenses. Rent is the expenses.
Prepaid expense are
No, rent. We are talking about rent only. Rent
Nominal.
is
Nominal.
expense, right? Expense and nominal. Because this is expense, it will. Okay, I will just remove this. Cash is the asset. I'm adding one more point here. Cash is the asset. That is why real account. Rent is an expense. That is why it could be
Nominal.
account. And what is the another one?
Prepaid rent is also asset.
Prepaid. Writing PR. Okay, guys, just bear with me. Prepaid rent is the
Also asset.
okay. So I have to write. Okay, prepaid rent is the asset. Right? If something you are giving in advance, for example, you have to pay in the future, but you are paying today itself. The accounting terminology or the accounting standard says you have to keep or show only 1,000 as of today. Rest you have to show as a prepaid. Today the books it should reflect only this and rest of the you have to show that the as an asset. You can't show this as an expense. Under the expense, we'll write only 1,000. I'll show you how. So asset, when we say something is asset, what is the
Real account.
real account? Any questions, guys? Here we are finishing off. I think we'll finish. Okay, we are already past the time. Another 10 minutes max I'll take and we'll wind it up. Everybody good now? Here?
Yes, sir.
Yes.
Now, what is the third step?
Applying the rule.
apply
Like the
rule.
accounting rules, whatever we have discussed. First, we identify the accounts involved. Second, we know the accounting type. Third step we are going to do, which is applying the rules. What is the rule for the real account?
Debit
Debit what comes in, credit what goes out.
So cash is coming in or going out when we pay rent?
Going out.
Yes,
Going out.
going
You have to
out.
credit the cash.
Yes, sir. It's a debit.
Going out.
No, credit.
You have to credit the cash.
Okay, what then? If something is coming in, write on the debit side. If something going out, you have to write on the
Credit side.
credit side. I am writing on the credit side. To cash. How much cash is going? Tell me the amount also now.
1,000 per.
How much cash is going today? Today, how much cash?
6,000.
6,000 is pocket. From my pocket, 6,000 is going. So this is, guys, we are practicing the compound entry. Okay. Okay. Expense is the nominal account. What is the rule for that?
Debit expenses and losses.
Debit all expenses and losses. Income you could have credited that. Because it's a debit, we have to write on the
Debit side.
Debit.
debit side, we write on the top right always. Rent account data. Right like this.
1,000.
1,000.
Don't tell me it is imbalanced, just write down 5,000 here, your entry is done. Don't tell me that. Because I am the interviewer, then definitely I'll ask you, why are you writing that? Make sure that you know the logic of each of the things you are writing there. And that could be helpful for you also. It's not like because how I want to see the things, but it could be really helpful for you also to understand and just question yourself. Third thing, something is the asset and that comes under the real account. Okay, what is the principle of real account?
Debit what comes in, credit what goes out.
Okay, and the item was prepaid rent, right?
Yes.
Prepaid rent, it is going, coming, again confusion. So whenever there is
But remember table.
whenever there is a confusion, what we do? We go to the table back.
Table.
See, the prepaid
Hold the
expense,
table.
Prepaid is an asset.
prepaid income, prepaid expense was the
Asset.
Debit side.
by nature.
Debit side.
Do you guys see it's like how they are connected to each other, right? We are just applying the logics here. Debit side, right? So write on the debit side. Prepaid rent data. How much?
5,000.
Here is my journal entry. Simple. Rent account. I told you, right? Because we are following accrual system and the concept. The concept says particular reporting period income or expense should be shown related to that particular period only. For example, if you are following Jan to December, then you have to make sure that you are showing income expense are related to those 12 months only, Jan to December. You cannot write something which is paid in January. Or if you are paying in advance also, you have to make sure that you are writing only which is related to this particular period. Till December, how much is my rent? Then only I have to write that much only as a rent. Rest of the amount you can show it as an asset. Make sense? That is the reason we are showing only rent account as 1,000 and prepaid rent, which is this item will go and sit in your balance sheet. This item will go and sit your P&L. This item is again balance sheet item. You should understand this balance sheet item also. Let me finish by this. Okay, you guys tell me, this is the P&L item or balance sheet item?
P&L.
P&L.
And salaries payable?
Liabilities.
Liability.
Liability, where does it go? P&L or balance sheet?
Balance sheet.
Balance sheet, because balance sheet is a statement of all assets and liabilities. So this item will go and sit in your balance sheet. Similarly, this entry also. Where is my entry? Cash. Cash is the P&L or balance sheet item?
Balance sheet.
Balance sheet.
Balance sheet.
It will go and sit your balance sheet. This
Asset
is
side.
Rent pay. P&L.
P&L.
P&L. So all these accounts would go from here to ledger, then ledger 2, they would go to trial balance. Maybe I think we have taken a lot of time. Maybe when I take the next session, I can show you how the cycle is. I think we were unable to cover, and interest of time, I don't know how many people are there. You guys, let's see. Okay, maybe I can have another session, guys, where we'll understand how these accounts would move from general. So these are general entries, right? Starting with the J. General entries. Then they will move to
Ledger.
From ledger to
Trial balance.
Trial.
And trial balance to either it will
Fixed
go to
assets.
P&L, either it will go to P&L, profit and loss account,
Financial
or
statements.
balance sheet, right? Financial statements we call it. Maybe I can take it in another session. Hope you guys were able to understand this. If somebody is not a part of, can some of our volunteers or the admin share our CGC job groups links? If somebody is not already part of our jobs group, we do share genuine jobs. We try to authenticate jobs and send, and we do have around close to 100 groups where we share all the job posting related to various jobs, not only finance, but related to all the fields. And we do have this kind of programs every Sunday and Saturday webinars, offline classes also there. If somebody is in Hyderabad, they can come and attend the offline classes also. And if somebody is not there on our CGC group, WhatsApp group, and want to see these kind of updates, I would urge you to check your chat box or check our flyer. The number is there. Just message on that number and get added to our jobs group. So I think that's it. Let me check if somebody has shared. So I don't want you guys to miss that. Yeah, it is already shared. Shweta has shared that. Click on the group and join the group. I'll allow you 1 minute to check your chat box and get added to that group very quickly. If at all you have any questions, I can take that. Relevant to the topic, of course.
Sami, can you show one more journal entry like this instead of 2 debit side and 2 credit side?
Anything you are coming example, discount you want to see?
Yeah, discount would be better, or depreciation also would be better.
Depreciation, okay. Depreciation will confuse people. That's the reason I don't want to go that. Somebody is really interested, they can message me on my number. I can explain them or take it. Because
Sir, go with asset sale. Anything asset sale or profit will be zero.
Asset side, you mean?
Asset sale of asset.
Okay.
Or profit or loss. That type of entry.
Okay, you can try. Machinery sold. Okay. Okay. So what is the first step?
Machinery sold for cash.
What is the first step you have to follow?
Identify the
accounts involved, right? What are the items are there?
machinery is the asset.
Fixed assets.
Just tell me the items, guys. Don't again. You are mixing up the things. Let us follow the first step. What is the first step? Identify the accounts. That's it. Don't make any generality. Don't categorize anything. Just identify. What are the 2 items? Machinery and
Cash.
cash. Simple, right?
Cash.
Okay. Go by step, then only you will get the entries. If you are confusing, jumping from here and there, then there are very chances that we confuse ourselves. What is the second step? You guys are
Apply rule.
no, account guys, I will allow you to look at this.
Account type.
Account type. I think you guys are already missing that. Take the photo if you want. Okay. Account type, right?
Yes.
And we added one thing, machinery is an asset. and it's a real.
Real.
Tangible.
Cash is also an asset
Real.
and the real account. What is the third principle we are following? Third step.
Applying the rule.
Apply rule. Apply rule.
Now you can do that. Rule is debit what comes in, credit what goes out.
Yes.
Machinery coming in or going out?
Going out.
Going out.
Going out, I have to write on the debit side or credit side?
Credit side.
Credit side. Two machinery. Assume that my value of this machinery in the books is 50,000. Right. And my market value is, I'm selling it on the, usually we sell it at a loss, right? As per the books, the value is 50,000. And when I'm going into the market, I'm getting only, say, 30,000. Happens, you will get less value.
Yes, sir.
Yes, sir. Because the moment you take it, buy it, and tomorrow you go and sell it off, they won't give you same price. So do machinery account, how much I have in my books? Book value is 50,000. On the credit side, I am writing 50,000. Okay. Cash is an asset and it's a real account. What is the principle? Debit that what comes in, credit what goes out. Cash is coming in or going out?
Coming in, we have to debit.
Coming in, right on the debit side. Something is coming in, right on the top, that is called debit side. Cash account data. How much cash I am receiving?
30,000.
30,000. So this entry is imbalance. Can you guys see that? This entry is imbalance.
20,000.
We always say, right, we are following double entry bookkeeping system and every debit must have credit. What does it mean? If your credit is 50,000, then your debit must be 50,000 only. If your debit is 30,000, then your credit also should be 30,000. Either ways. But in this case, there is an imbalance. Now, what we understand is, with the naked eyes, if you can see, my book value is 50,000, but market value is something down. So it is implied. It is implied that there is a
Loss.
So one more item which is hidden, right? One more item which is hidden here is the loss. Right? Then we have to apply the same logic here. Loss is a loss.
Expense.
Okay.
Nominal account.
That is why I am saying loss is a loss, because we have a term for loss, right? So loss is a loss, and this is a
Nominal account.
nominal account. Charging down. Writing is so that it is working. Cash loss is a nominal account. What is the principle of nominal?
Debit, loss, and expenses, credit comes and goes.
Whenever they loss, write on the debit side.
Debit side.
What do you write here?
Loss on sale.
Loss on sale of machinery.
Realized loss or loss on sale.
Realized loss on sale of asset, whatever you want to write, that is your convenience. Okay. Loss on sale of machinery. Writing it very small, I know. Loss on sale of machinery account data. How much loss I am getting?
20,000.
20,000. Is my account balanced now?
Yes, sir.
Yeah. Have we proved that we are following the double entry bookkeeping system? Where
Yes, sir.
debits are equal
Yes,
to
yes.
my credits. And here in the loss narration, you know, right, narration, you can write it on whatever you want. The book value of the machinery was 50,000, but we are selling it on 30,000. Therefore, there is a loss. We are recording a loss of 20,000. You can write. Simple as that. Okay, fair enough. I hope you guys this was of some help to you in understanding the basics of accounting. That this is just a small portion, I would say. and hope this would give you some clarity on the journal entries in the, especially understanding the journal entries where we have multiple items. I do suggest everyone to follow these rules. Don't jump here and there. Take your time. Once you become expert, then you can do that. You can jump directly from looking the entry directly. You can record the transaction. Okay. So you do that at the next phase. Tomorrow, as a homework, right? When you go home back today, or we are done with this session, make sure that you are practicing the entries and come back to me. I would definitely would love to answer your questions. Same group where you guys might have got added already. Use that group or just send me your queries separately wherever, like should by adding you. I would be also there. If not there, just get in touch with any of our admin, then they can help you there. With this, any last thoughts you guys want to mention? Any feedback? Was it good? Not? Need the improvement?
Good, sir.
It was very useful, sir.
Learn something.
Good, sir.
Okay. I'm happy.
The training was really good.
Yeah. Thank you. Thank you. Maybe we will have another follow-up session next weekend or after that. Just keep looking into the group you guys have got added. Thank you and have a good day, everyone. Thank you.
Thank you, sir.
Thank you so much.
Thank you.
Oh, yeah, I can see the chats.